Hello everyone, this is Stock Market Daily. Thank you for joining me today. It is March 10th, 2023. As always, this is not financial advice. Please don't copy my trading strategies because you will lose money. This is only for educational purposes. Okay, so another rough day for the markets. As you could see, we started the day off with a little bit of a gap down, and we're actually up pre-market on the jobs data. So it did come in, with a slight bullish tilt, I would say. However, the issues that are weighing on the banks have more impact on the markets today, and we've gapped down and continued down until we hit this support level at 38.77. From there, we bounced up, and right here, it looked like the markets were about to recover. The banks were actually going up. They were doing better. JP Morgan was outperforming, I would say, the entire sector. I actually placed a covered put order on Bank of America. I think it was for $28. Let's see. Yep, $29 strike price. I collected $32 for it. I figured if it comes back to $29, I don't mind owning Bank of America for $29 per share. So anyway, the banks were kind of recovering here and everything looked like it was going well. Unfortunately, I think right around here somewhere we got news that there was an article by the FDIC that they basically have shut down Silicon Valley Bank. And I believe from that point on, that's what kind of caused this sell-off and weakness in the markets. So we closed down much lower. The S&P 500 was down by 1.45% at the end of the day. Hit a new low. We were almost pretty much break even for the year if we continued a little bit lower. So let's take a look at the trades that I did. So the very first one was that Bank of America covered put, cash secured put. Then I did a little bit of a splitting here of my highest option on the put side. Let me kind of go over that really quick. So I had, you can't see that here anymore, but I had a option. Let's take a look. So I had an option, a put option for 3985, which was my highest strike price. And this 3985, let's just say that this was here. This 3985 option was too much to roll over to. I could have rolled it over to maybe Wednesday or so to get it down to a strike price. But I decided to actually split the option in half. So I had one and I decided to split it in half. So you'll see that here. So we had one option plus one. I bought it back and I sold two. And I sold two for 3935. So the 3985 turned it into two options that are 3935. And you could see that. You can't see that here now, but basically that does two things. Number one, that will increase your risk, obviously, because instead of one option, you now have two. But at the same time, I was able to get it down to a level where it's closer to being out of the money. And if you look at the chart, at 3935, we were almost right there, right? So had we continued on to this, with this trend, this pattern here, or if we didn't break back down, I might have actually been out of this option or out of two of those options. So we went from something that was right here, we brought it down to here. So this is this kind of a strategy I use sometimes to get out of a position that is very, tough to stay in. Now, unfortunately, it didn't work out this way for Friday, but regardless, the option is, when I rolled it over, it is now at these two options are at 3920. So it's still much better than it was before. Um, I'm hoping that, at this point, that we've had quite a bit of a sell-off here, and that this option is going to expire worthless here, and after we get a little more calmness in the markets. So let's continue on from that. We have a few other options I rolled. I exercised a meta stock previous leap, did a little bit of cover call selling on that, and pretty much all of these are rolls. So there was one call option that I sold, and it was right here on the SPX, and everything else was a roll. So with all of the rolling that I did, it was 1,175 for the day of profit. So again, not a bad day for essentially being trapped. Now, unfortunately, as you can see, these are for March 14th. So these were all rolled to for the 14th and not the 13th, simply because there's a lot more premium on the 14th. We are going to have CPI data on the 14th, so there's more premium, there's more extrinsic value on these options. And pretty much we're, at this point, the market's kind of looking to CPI data day to save the markets from all the negative press and all the negative news that's going on with the banks. On the 13th, probably just going to, I'm probably just going to sell some calls, most likely. I'm assuming that we're not going to have too much positive news unless something really, really changes with the banks. I don't think it will. There's still probably more fear to come here. It's just going to chill out for a little bit. I also have my regular cover calls that I sell on Mondays. But on the put side, we have everything is locked in pretty much, and it's pretty deep in the money at this point. So yeah, that's it. Still, managed to make a little bit of money. We'll see how long that continues, and we'll see you guys next week. Thanks. Bye-bye.